You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, you saw gold take a bit of a hit. Well, inflation's going up. Talk about cognitive dissonance. I don't know what to think anymore, but a person you're about to hear from always knows what to think. Andy Schectman, milesfranklin.com with us now. Andy, welcome back. So inflation continues pretty much unabated, both in the U.S. and abroad, with no signs of it coming under control, other than if you think that a slowing economy is going to reduce the rate of inflation. Without stagflation, I don't know what to think.
Yeah, well, look, Kerry, the ideal of every nation is to be able to print as much paper as it wants, but at the same time keeping inflation in check. And you have to wonder, how the hell do they do that? I think the best way to get that done is to lie about the inflation rate, which is exactly what most nations are doing, including ours. We're being told that inflation, as measured by the CPI, is 8.5%. We know that's a blatant lie. We look at an administration who wants to have us believe that an $850 billion bill to help reduce inflation, the anti-inflation bill, whatever the heck its name is, actually will do such a thing. By borrowing $850 billion from the Fed, you're just watering down the dollar even worse, or looking at the $10,000 per student loan forgiveness. Who's going to pay for that? It's immoral, it's disgusting, and it's just more of the same thing, that no matter what we're being told, our politicians find a way to continue to inflate away their problems. They always choose inflation over austerity. They always choose the printing press over the tough decisions. Inflation's not going away. In fact, I think if the premise that I have really stuck to for the past year and a half about the impending loss of the petrol status, as now you see an admission by Saudi Arabia that they want to join the BRICS nations, we're getting this close to that admission. And if all of a sudden the dollar is no longer the world reserve currency for petrol, and every country on the planet that for the past 50 years has had to own it decides to sell those dollars or dump them in favor of other currencies for settlement in oil, if you realize that every country on the planet Earth has had to own dollars in order to buy oil since 1974, and that is this close away from breaking, if you think inflation is bad now, wait until you see a flood of dollars hitting the shore as the dollar loses its reserve status. And I think when you realize just how fragile things are in the Saudi kingdom as it relates to the U.S. and its dollar hegemony, I think inflation is going to go nowhere but higher. And so, yeah, gas is down a little bit leading into the midterms, but it's a bunch of nonsense as far as I'm concerned. Inflation's got nowhere to go. And you're right. I have felt the same way for 2 years, that we are on the pathway to hyperstagflation, which is massive increase in inflation, in taxation, coupled with little or no economic growth, and a contraction. You can see GDP has contracted 2 quarters in a row. So we're on our way there. And I think if it weren't for the lying statistics, the way that the government measures these things, the numbers would be far, far worse than they actually are.
Yeah, obviously, we know rates going up, housing affordability at all-time lows. That is a kind of inflation that can't be measured. Obviously, it only affects a smaller portion of the population. Those of you who are out there looking for a new home, got to sell your old home, buy a new home, and hope to come out somewhat even on the deal. But obviously inflation is there, so it's taken a breather, but it's coming back. And the thing that nobody addresses, and I've not seen any economist talk about this, Andy, is these inflationary waves are waves. They're cycles. They don't just happen for a couple months and then go away and, forget about inflation. The last time we had an inflationary wave, It broke when interest rates were raised to 20%. And nobody in their right mind is even suggesting anything near that. So short of a massive recession, global recession, depression, prices are going to keep going up.
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, and it's interesting to say that. There was a report recently by the National Bureau of Economic Research. They came out and said that the 13.6% interest rate in June of 1980, if measured by the way that we do it today, would be 9.1%. Well, this report came out in July. That was exactly what the CPI was in July of 9.1%. And to your point, the way Paul Volcker got tough on inflation was by raising the federal funds rate to 19.75%. That certainly got tough on inflation. Our form of getting tough on inflation, according to Jerome Powell, is to raise rates to 2.25%, with inflation running 3 times that, plus measured by a faulty metric, it's more like 8 or 9 times the rate of return. Inflation is, if you talk real numbers. And so they're not getting tough. They talked about selling $60 billion a month in treasuries and $20 billion a month in mortgage-backed securities. They've only sold $40 billion worth of anything in the past 20 weeks. So they're not quantitatively tightening. They're not letting things roll off their balance sheet. They aren't getting tough on inflation by any metric. And that's kind of my premise with, are the actions of the Federal Reserve intended or not by weaponizing, or the U.S. government weaponizing the dollar and kicking Russia out of SWIFT and doing all the things that they're doing, antagonizing, I think, to some degree, the rest of the world, or at least opening their eyes to the fact that, hey, are we next? Are we going to be the ones that are sanctioned next? You look at China. They've sold bonds 7 straight months in a row, totaling over $120 billion. Why would they own our treasuries? A, when they're negative real return, and B, when they have their eyes set on Taiwan? Do they want to have their assets frozen and their SWIFT privileges taken away and everything sanctioned? No, they don't. And so they're going to break free of the dollar hegemony, the dollar stranglehold. And I think that's what you're going to see happen more and more and more as these countries do their best to break away from that. And I think that you ain't seen nothing yet. As far as I'm concerned, we're seeing, I think a fracturing of the East and the West, a break apart. And, look at what Zoltan Pozsar just came out and said. He said, look, the West has been the source of demand and the East the source of supply, but this relationship is breaking down. And he thinks that the Fed, in order to stop inflation, and this is if the Fed were to get tough, would have to raise rates to at least 5 or 6% and keep them there for years in order to curb inflation, years, even at the cost of an economic depression. So this is a guy that was number 1 or 2 or 3 at the New York Fed. He's the repo market expert. He's the one who said we're heading into Bretton Woods 3 right now, which is a new system dominated by commodities rather than by debt instruments. And look who owns all the commodities. The BRICS nations. They own the majority of the oil, the natural gas, the fertilizers, the rare earth metals, the palladium, the platinum, everything. And yes, we have a lot of untapped resources here in the States and an administration that is unwilling to access them. But even still, the conglomeration of all these countries, I think, is enough to where that side of the table is rich in commodities and resources, and we are knee deep in debt instruments and the largest debtor in the history of the world. So, Yeah, I think things are changing, and I think rates will rise not by the Fed at the hand of the Fed, but by the hands of the market when you see Saudi Arabia and OPEC say, thanks for the memories. We've joined the BRICS nations. We're going to issue oil in rupee, ruble, yuan, dollars, gold, and euro. And when that happens, like that, dollars come flooding home because the world has had to own dollars to buy oil. They dump them, rates spike, and everything collapses. Now that's your great reset. Does it happen? I sure as hell hope not. But let me tell you what's going on right now, because we're seeing massive drawdowns in supply off the LME, off the COMEX, and off of the ETFs. We saw in one day 2 weeks ago over 250 million ounces of silver drawn down off of the London Metals Exchange. Massive deliveries, things that we don't typically see. Right now on COMEX, there's only 55 million ounces left in the registered category of silver. In the registered category, we've delivered that much off of COMEX in the last 4 months. The registered category is what is eligible to be delivered immediately. So they're on this, I mean, they're this close to bleeding COMEX dry, and to the point where if you take a look at what's happened in SLV, now the only ones that can pull metal out of SLV are the authorized participants, the ones who filled it with baskets. In the last week, we've seen 20 million ounces taken out of SLV by the authorized participants. In the last, let me see the number here. It's actually quite staggering, not just the month number. 20 million in the last week, 60 million ounces in the last month, and 100 million ounces over the past 4 months. Now, the commercial banks are able to do what's called share redemptions out of SLV, and it's very hard, it's opaque to see who did it. We only know that it's the authorized participants, because you and I, if we own SLV, are only allowed to redeem in cash. But if you're an authorized participant, you can slide silver out the back door. In the last 4 months, 100 million ounces. You put COMEX into that, 155 million ounces have been delivered in the last 4 months off of COMEX and SLV. So you're talking, what, 3 times the amount of silver has been delivered off of COMEX and SLV than there is backing the price setting mechanism of the world for silver. It's right on the razor's edge. If we talk about this group called the others, who we've talked about before, these are the private investors on COMEX. They're not the commercial banks. They're not the managed money hedge funds, which we see on the Commitment to Traders report. They're the third group of reportables who popped up on this report 2 years ago. And I've been talking for 2 years about how they have been massively bleeding down supply over the past 2 years off of COMEX, taking possession and pulling it off. Over the past year, the others this year have already taken possession of 103,079 contracts of gold. That's 10,307,900 ounces, or 321 tons, have been pulled off of COMEX by the most well-funded, well-informed, sophisticated investors on the planet, private investors. And what just happened the other day is absolutely mind-numbing. And in one day, well, let me back it up. The uber wealthy, and this would be the others, in my opinion, are the ones who did this, because what happened is on COMEX, on the CME, the Chicago Mercantile Exchange, they have I think it's like a mini contract where kilo bars back it. Now, when sovereign entities buy gold off of the exchanges, they take either 100-ounce bars from COMEX or 400-ounce bars from the LME, London Metals Exchange. But the COMEX does hold these mini contracts, and they have kilo gold bars, right? So they don't back the exchange, but they back mini contracts. So in one day, 41% of all the kilo bars was delivered off of the exchange. That amounted to 174,612 ounces in one day delivered off of the commodity exchange. And what's most interesting, again, about this is not only is this withdrawal not typical to begin with, but it wasn't the good delivery bars. It was kilos, billions of dollars worth that sovereigns wouldn't buy. So, you know, it's likely the much smaller, wealthier people pulling the gold out. And you know, these people are connected. And what made them suddenly decide to take possession, where withdrawals of this magnitude never happened? But let me put this in perspective for you. Because of this withdrawal, the 50-day moving average, or 50-day average of withdrawals of gold from COMEX, just hit a new high of 131,293. Think about what this means for a moment. That means that 131,293 ounces of gold roughly $233 million at today's numbers, have been withdrawn from the COMEX on average every day for the past 50 days. So, I mean, I would argue, do these people think something wicked this way comes? I don't know. It sure seems that way to me when you see 175 million ounces taken off of COMEX. Now, let me add one little twist to this. This is the biggest deal of all. So we've been talking about manipulation forever. You know, when GATA had a conference in, I think, 2005 in the Yukon, Putin sent his number 2 economic advisor to the conference. So the Russians have known about the Western manipulation of gold and silver for a very, very long time. So about a week ago, Russia comes out. You can Google this, it'll pop right out. They come out publicly. The central bank says, we want a new gold platform domiciled in Moscow to break the corruption of the Western system, both the LME and the COMEX. And we want this to be for the new BRICS nations, because think about it. The RICS and BRICS are the ones that accumulate and produce all the gold. Russia, China, India, South Africa. They just got Venezuela. They got Brazil in there. Iran just joined. Saudi Arabia's joined. Turkey's joined. Egypt has joined. All of these countries are joining the BRICS, which will be about 90% of human population. But how do you break the Western stranglehold on gold and silver? Here is how you do it. They come out and say, we want a new platform because we're the ones holding all the gold. And remember, in 2019, gold was revalued what? The world's only other tier 1 reserve asset by the Bank of International Settlements. There's no coincidence that this was done. They know what's coming. Right. The only other tier 1 reserve asset, right? So here's what happens. And I think that this is something people need to think about, because I think that when this happens, it's going to shoot the price of gold to the moon. So if Moscow gets its wishes and they issue a new gold hub that is more realistic than the manipulated gold center here in the COMEX, where only 55 million ounces can back the price setting mechanism of the world, when 4 times that or 3 times that amount have been delivered in the past 4 months, it's all based on paper. Yeah. So here's what happens. Let's say right now we have gold at 1750. What I think they'll do is this. They want to fix gold in Moscow every day, just like London does. So what if they open it up tomorrow and they fix gold at $2,100? Let's just pick a number, right? At $350 higher per ounce than the COMEX does. What do you think is going to happen? One word: arbitrage. They will drain the COMEX market, and everyone will take that metal and sell it to the Moscow settlement at a $350 per ounce premium. They'll make gazillions of dollars in that arbitrage. They will bleed the Western system dry and collapse it. And then once Moscow and the BRICS nations hold all of the gold, they can jack the price up to whatever they want, because they're the ones that have been accumulating it. You want to talk about gold and silver being set free to find real price discovery, to find equilibrium in this crazy world we live in? It's exactly how it happens. You have an exchange that caters to 90% of the world population, the BRICS nations, and all of the countries joining the BRICS, including many of the Eastern European countries who I believe will do it, including Turkey, a lot of the Arab countries like Egypt and Iran. You got South American countries like Venezuela. It's happening, right? And if they did that, which they just publicly said they want to, and they peg it $200, $300, $400 higher than the LME in a matter of days, and the COMEX, in a matter of days, you will see that arbitrage blow things up to the point where no longer does the West control the price setting for gold and silver. And I think we are that close to something like that happening. So people should be accumulating gold and silver with the long game in mind, just like the Chinese are, just like the Russians are. They are positioning themselves, I think, for the ultimate de-dollarization. And the benefactor of that will be those that hold the world's only other tier 1 reserve asset when the dollar is collapsing, and that will be gold.
All right. Well, things are seldom what they seem. There's always things going on behind the scenes that we aren't privy to, and your thesis is very possible. So it's probably a good time to pick up some ounces if you were planning on it. And Andy, is the guy to go to. He's the only person I will buy precious metals from because he's the one person I know I am going to get delivery from.
Well, I appreciate you saying that. Our new website is about 2 to 3 weeks from launch. We finally are in beta testing. We'll allow people to purchase online. In the meantime, send us an email at info@milesfranklin. Say Kerry sent me or the Financial Survival Network sent me. We'll make sure your listeners get the very best price in America. We will send you an updated inventory. We'll answer your questions. And in roughly 3 weeks, you'll be able to go online and do these things yourself. But as always, we definitely encourage people to give us a call, because I think where we're heading, relationships will mean more than they ever have. So, yeah, Kerry, I always love our brief conversations. I appreciate you and your kind words. And
Likewise.
I thank you for having me here. And I'm happy to come back at the drop of a hat whenever you need me. All
right. Well, I'm sure it'll be sooner rather than later. Things are definitely picking up. If you got a question for Andy, you can always shoot me an email, kl@kerrylutz.com, or post it up on YouTube. And go over to the site, get the newsletter. It's free, financialsurvivalnetwork.com. Andy, we'll talk to you in a little while.
Stay well, Kerry. I appreciate you, brother.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.